Hey, good morning. Let's go over today's trade plan. So in the overnight session, we had resistance at 78.5 to 80.5, and ES ended up topping out over there and then breaking all the way down to the bottom of yesterday's range and even the prior day's range. So at this point, heading into the day, the market has tested that 59 quarter to 61 quarter support and found buyers over there, and we've seen a relatively decent bounce in this market. But at this point, heading into the open, we have resistance at 68 to 70.5, and that's really going to be the key defining zone on whether buyers can regain control or whether sellers continue to remain in control and we see a continuation lower. So 68 to 70.5 is the primary inflection point on the upside, and if we hold below it, it'll tell us that sellers still can maintain control. And on the downside, we'd have to see a break below the 1964 high volume node and 59 quarter to 61 quarter in order to confirm the sell side in control. Otherwise, this could simply be a two-sided market, and we could simply just be balancing and continuing to balance in a range. Because if you look at the daily chart and the last 2-3 days, you can see that we have a pretty defined range now, and the 59 quarter, 61 quarter in that case could be the bottom of that range, which has already been tested, and a break above 68 to 70.5 could end up putting buyers back in control, and we can head back up to 78.75 to 80.75 and potentially even 85 to 87 in that case. So 68 to 70.5 is really going to be the defining zone as far as which side really takes over. And then on the downside, in order for sellers to actually really press and end up getting a bigger move, we'd have to break below 59 quarter to 61 quarter. So those are really the main zones on the day, and those are really going to help us define the overall bias on the day. And break above 68 to 70.5, we know it can put buyers in control. It doesn't necessarily have to be a very strong move to the upside after the weakness we've seen in the overnight session, but at the very minimum, it would tell us that we have to be cautious on the short side if we do get a break above initial resistance. And then on the downside, a break below 59 quarter, 61 quarter, that would really confirm the breakdown idea, and at that point you would be breaking below essentially a 3-day balance, and below 59 quarter we could quite easily test 55 to 56. There's some chance for rotation there, but it's not really a high probability zone at this point. Because you would be breaking below a pretty key support at 59 quarter. So at that point, the next inflection point is 48 quarter to 50 quarter. So that's a zone that still could get a decent bounce back up towards 55 to 57. So there is potential for a 7 to 8 point bounce off of the initial support zone, 48 quarter to 50 quarter. Below that, the next inflection point is around 43. And then 38 to 40 is another zone that can still get a decent bounce on first test. So one of the things that we discussed in yesterday's trade plan was that this market has been very resilient, and even if we're going to head lower, it's not just going to be in a straight flush, because the market has built up these pockets of support along the way, and first test of each zone can still attract buyers and end up in some pretty decent bounces. And so far we're seeing that idea play out. The 59 quarter to 61 quarter, there was a key HVN down there, the bottom of the recent range as well, and we're seeing that the market is putting in a pretty decent bounce off of that zone. But at this point we're just going to have to watch and see whether the sell side is able to press and whether this is going to be a bigger move lower, or are we simply stuck in balance, in which case, we can just balance within the pre-market support zone and the 78.75 to 80.75 resistance. There's some chance for the market to go higher, but given the overnight bearishness we've seen, I'm not really looking at the 85 to 87 zone right now. Overall, we can still just balance in a range. Even if we break above initial resistance, it wouldn't mean that, the market is super bullish. It would just tell us that, there's some decent strength in this market, and we could simply just be balancing, and it could just be a two-sided day then. Whereas if we break pre-market support, then it would be a very bearish day, And even though we can get bounces along the way at the support zones, overall the short-term bias would clearly be bearish, and the bounces don't have to be very exaggerated at that point. We'll be looking at 7 to 8 point bounce ideas, and understanding that below 59 quarter there could be some acceleration to the downside. So as we head into the open, those are the zones we're going to be using, and we just need to determine, are we still in a relatively balanced market where we just stay in a range, or are we setting up for a bigger move lower, in which case 59 quarter could break, and that is really what would confirm it. And right off the open, the 68 to 70 half is the key resistance point. So let's just see how the sellers react at the initial resistance zone, and let's see if the buyers can defend 59 quarter, 61 quarter, and we will take it from there.